Hello and welcome to another update video about Natgas. As we're heading into a new trading week, well, not yet, but very soon. The price obviously end of last week challenged the idea of potentially one more low. But as I said, the break above $2.92 will be an important signal that actually a low has already been struck. So depending on which viewpoint you take, this is either a good or a bad thing, but whatever it is, it's just a marker. And it's a key pivot. The price is now at a key inflection point. That's what these boxes are for. So it's very, very binary, you could say. So we did say that below $2.92, which is the 50% retracement level, a wave 5 to the downside should still unfold. If we see a break above that level, but it would have to be a sustained break because this is not an invalidation point or anything, but a sustained break above it would indicate that, something bullish is going on and we have already bottomed in a more substantial low. Now, what that might mean, we're going to talk about that in this video. Remember, also for everybody who's new on the channel, we have been tracking this downtrend for, since early 2023. And we've been watching and waiting for another low to happen. That happened. Looking at the microstructure, I would still think another low is ideal, but if we get a break above $2.92, I have to assume a low is in, because based on the wave structure, the idea would be that this is a 1 to the wave 3 low most recently in December. This should be a wave 4 and then one more low in a wave 5. But if there is a sustained break above the $2.92 level, okay, it's the 50% retracement, that's too aggressive really for a reliable wave 4. And while it's not invalidated then, the idea of another low, probabilities will significantly shift towards the idea that a more substantial low has been established. That means we still need to be on the side of caution, another low could happen, but I will primarily watch for a stronger recovery. It will be, as always, the first deeper pullback that will tell us the truth. The first deeper pullback, if that's going to hold after this rally, that's going to be the confirmation that a low is in. At the moment, a break above resistance would simply be an indication, especially as the rally is only in 3 waves so far. It's not a 5-wave rally, okay? So we're going to zoom in now and take a look. By the way, there's also a moving average coming down here. That's actually the 50. So 50 on the daily, we've reached that exactly now. So it will be extremely interesting to see if the market can push above it and also the 50% retracement level with a gap into next week or not. So that is going to determine where we are heading likely. Okay, so $2.92 level is key. Let me see if there is another level that we could observe in addition, because we're talking about a sustained break, right? So if there is another level just above $2.92, it's not really, there is the, let me double check something. The next Fibonacci level is the $3.2 level, but that's already a little bit too high for, let's say for a wave 4, also for a C wave in wave 4. So yeah, the $2.92 level is key, but let's say the $3.2 level should be observed as well, should we get another peak. Again, it's not an invalidation point, so it's all about a sustained break. But I have to say, the way we're moving, it shows quite a bit of upside momentum. So at the moment, I'm not happy to take this count off the chart. It's still the immediate bearish potential, but the price would need to gap up with obviously a gap up. The market would need to start into the new week with a gap to the downside. Okay, so what are the, let's say, more bullish scenarios then? Well, see, another interpretation would be that, for example, this third wave here never finished, but in fact finished here. It's just something, but that would still mean we have a more substantial rally. Okay, so in that scenario, wave 4 is likely going to extend a little more. Yeah, and if we talk about retracements, roughly, we talk about the area possibly all the way up to $3.68. So that's another I will look at that in a little bit more detail in the coming videos in the coming week if we really get a break above $2.92. A few things I want to look at, but the idea would be that we will then approach a new resistance area, and that will be the next decision point. But what I want to emphasize is that there is, of course, still a possibility until we see the first deeper pullback that we make that one more low. The price overall, looking at the bigger picture, has not moved enough yet to really confirm that the low is in, but it's an indication, right? And probabilities are shifting towards a low is in. So the thing is, the problem is this move up doesn't really look impulsive, which is why I'm still watching for corrective rallies, but maybe more substantial ones. And it could form an A wave, a B wave, and a C wave. Either way, so if we break above resistance and we have some evidence that this A wave has topped, the B wave pullback could be a pullback entry point for anybody who's looking for one. At the same time, that pullback would be additional evidence that a lasting low has been established, while in a more bearish scenario, but that would likely be the alternative, the C wave could take us higher, it could be traded. It would still keep the door open for lower, so be aware of that, but it would be a long trade scenario, which would be in line with a more bullish idea of a wave 1, a wave 2, a wave 3, 4, 5, which is the bullish idea that we would follow then probably primarily with a break above 292. I will decide that once I know if the resistance area breaks or not. But the point is, anybody, for example, who would like to get in the B wave pullback or wave 2 pullback could then get a position to basically, get positioned for both scenarios. Because it doesn't really matter if it's an AB pullback or AB setup or a 1-2 setup. They will differ going further, but if it works, that setup, then obviously it's all about moving up your stop loss and so on, and that could allow you to trade the more impulsive bullish wave, but you would be protected in case it is just another wave 4, which will result in another low. But for now, things are looking more bullish, so keep in mind there is still a possibility, even if we break above resistance, for a more extended wave 4 rally, but that will remain just an alternative. I will probably, if we get a sustained break above 292, track a more bullish scenario. And once I get a little bit more clarity, if we really get a break above resistance, I can also give you some more specific targets going forward. At the moment, this to me is still a 3-wave move. Yeah, that's the problem. A, B, and then, there's even a possibility to put the A wave here, the B wave here, and then this is now the C wave, but it's just getting a little bit too high, okay, for an immediate downturn, which is why I thought about, okay, it could be a larger A of an even larger ABC. It could also be a leading diagonal, of course, in a bullish, in a very bullish interpretation. But either way, I highlighted the 292 level. If that gets broken, we are going to focus on more bullish interpretations going forward. We will then track the support areas. Once they get broken, that would be a signal, oops, the market wants to head down lower again. But for now, let's first see how the market is reacting to 292. Notably, it stopped exactly there before closure, end of the week. So yeah, I'll keep you updated. That's really everything I can do, just to highlight really the key levels again. Note that a break below last week's low at around $2.68 here on the futures chart would be an indication that wave 4 has topped. Again, note we have arrived at the 50% retracement level and the 50-day moving average. I think it's an EMA. No, it's a simple moving average. And also, if the price then breaks below last week's low, a break below the next support will be further evidence at $2.52. But there's currently no evidence that this rally has actually topped. So we don't really see the reaction to resistance areas that we wanted. While this was a target area to the upside, we said we want to see a reaction somewhere here to further confirm really that this is the correct roadmap the price plans to follow. But we would have to adjust the scenario with a break above $2 and 92. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.